Meet the 47th President of the United States, and perhaps the most controversial individual in the world, Donald Trump. Love him or hate him, one thing is certain: his policies will move markets, creating massive opportunities for smart investors. Over the next 4 years, industries will rise, regulations will shift, and sectors that align with his administration's agenda will explode. Today we're breaking down exactly how to invest during a Trump presidency, which assets to focus on, and how to capitalize on political moves for massive financial gains. Whether you're a beginner investor or a seasoned pro, we'll cover everything from stocks to AI and crypto, all while providing you with a 90-day roadmap to prepare your portfolio for success. Stick around, because those who understand the game and take action now are the ones who will win big. Welcome to 90 Days Better, the channel that covers habits and strategies to improve your health, finances, and productivity. Sit back, grab a coffee, and let's begin today's topic with a bit of context. Election cycles don't just determine political power, they dramatically reshape economies. During his first term, Trump's policies focused on tax cuts, deregulation, and bolstering industries like energy, defense, and manufacturing. But here's the challenge: markets are volatile and act unpredictably during political transitions. In 2016, while the S&P climbed 15% in a year, many retail investors missed out due to focusing on the wrong industries. The takeaway here is that missed opportunities can cost you thousands. So how do you position your portfolio to thrive during a second Trump presidency? Your first step is research. During the initial week, focus on analyzing industries historically favored by Trump's policies. Energy, defense, and industrial manufacturing stand out, with potential tax incentives and deregulation likely to drive these sectors forward. Look into ETFs like XLE for energy or XAR for defense, as these provide diversified exposure. On the crypto side, pro-Bitcoin policies and regulatory clarity may open doors for blockchain applications in infrastructure, logistics, and supply chains, key focuses of Trump's agenda. Consider projects with strong enterprise partnerships, such as VeChain or Ethereum-based solutions targeting real-world use cases, like Mantra. For AI, explore companies involved in automation and machine learning within the defense and manufacturing sectors. Nvidia and TSM, for example, are well-positioned to benefit from increased demand for AI-driven solutions. Focus on stable large-cap investments, allocating a smaller percentage of your portfolio to more speculative plays. By the end of the first week, aim to have a broad understanding of market conditions, portfolio management, and what asset classes best fit your risk tolerance. Before we cover the next section, hit the like button and let us know in the comments which assets are the benchmarks of your portfolio. The next few weeks are about refining your strategy as markets price in expectations on Trump's policies. Historically, defense contractors like Lockheed Martin and Boeing surged during his last administration due to increased government spending. Use this as a guide to monitor your investments and look for entry points in similar companies. The energy sector also tends to gain momentum as deregulation policies increase oil production and natural gas exports. AI adoption in industrial and defense applications will accelerate, creating new opportunities in companies like Palantir, which specializes in government contracts. This is the time to increase exposure to stocks tied to government-backed innovation, as Trump seeks to maintain the US's competitive edge on the global stage. In crypto, regulatory clarity is key. Focus on utility tokens aligned with infrastructure goals. Trump's administration may lean toward recognizing blockchain solutions in logistics and data security. Diversify into blockchain oracles like Chainlink, which provide essential connectivity for these use cases, and layer ones like Solana, which use smart contracts to power Web3 infrastructure. By the end of month 1, your portfolio should be balanced across safe bets like large-cap defense stocks and speculative opportunities in blockchain and AI. Monitor news and treasury bond activity during this period to get a broader sense of market sentiment. In the second month, your goal is to track macroeconomic indicators that reflect the Trump administration's priorities. Defense and infrastructure spending will push companies in these sectors to outperform. Broader industrial ETFs, such as IGF, which tracks global infrastructure investments, will also gain traction. Diversify further by investing in undervalued industrial stocks and renewable energy. Yes, renewable energy. Despite Trump's focus on fossil fuels, global shifts towards sustainability create untapped opportunities for profit in the clean energy sector. Trump's America First policies favor reshoring manufacturing, creating massive opportunities for companies leveraging automation and robotics. AI companies will benefit from increased demand for automation across industries. Firms providing software solutions for predictive analytics, like C3 AI, could become market leaders. This is the moment to look at mid-cap stocks and companies outside traditional tech giants to capture exponential growth opportunities. Crypto markets will react to regulatory clarity and increased institutional adoption. Funds like BlackRock, who are actively advertising Bitcoin and Ethereum ETFs, will continue implementing blockchain into their offerings. Stablecoins and tokens like AVAX that are tied to enterprise solutions may experience significant adoption. Diversify into Layer 2 solutions, such as Polygon, to capture growth in scaling technologies. By the end of month 2, you should have a noticeably deeper grasp on individual assets with institutional backing, as well as an understanding of how they respond to easing regulations. Keep a close eye on policy developments to pivot as needed. If you've made it this far, let us know in the comments by typing "still with you," and let's move on to the final month. By the third month, your portfolio should be near complete and show noticeable growth, as the compounding effects of strategic allocation should be apparent. Stocks in energy, defense, and infrastructure will have benefited from early government contracts and policy shifts. Keep cash on the side to capitalize on new opportunities, and diversify further by reinvesting dividends or gains into smaller cap companies poised to benefit from policy ripple effects. Further into Trump's presidency, AI's role in transforming industries like healthcare and logistics will become more apparent. Companies focusing on AI as a service or niche solutions in autonomous systems should see accelerated growth. Your exposure to this sector, carefully balanced with safer assets, could yield outsized returns. Remember us mentioning ripple effects? Keep an eye on sectors like nanotechnology, 3D printing, robotics, and gene therapy, all of which could benefit from deregulation, which further boosts innovation. Meanwhile, crypto will likely stabilize as institutional adoption continues. Projects integrating AI and blockchain, such as ASI and Near Protocol, are set to redefine how we think about decentralized technology. Lock in profits from high volatility assets and reallocate to more stable, long-term plays. As AI adoption grows, tokens with real-world applications in predictive analytics and automated contract execution will solidify their market presence. Toward the end of your 90-day prep, long-term hold strategies should emerge for both equities and crypto. Whether it's Bitcoin, the S&P, gold, or even a high-yield savings account, have a plan in place for stable long-term growth, as these are a few examples of how you can safely reinvest profits. Before we reveal the alpha, let's drive in the most important point as it pertains to you. After 3 months of strategic planning and research, you can capitalize on emerging opportunities in energy, defense, AI, and blockchain by building a purpose-driven portfolio of assets that benefit from Trump's policy changes. You can gain an understanding of how these assets respond to macroeconomic, regulatory, and political shifts in arguably one of the most exciting times to invest, all while becoming one of the top 10% of retail investors that use this data to their advantage. This is what it means to invest with foresight and precision. Now, let's unpack the alpha by examining what worked in the past and how things stand today. Trump's 2017 corporate tax cut sent the S&P soaring 19% that year, while deregulation fueled record profits in banking. During his entire first term, the Dow rose over 50%, defense stocks outperformed by 70%, and energy stocks surged. Trump-era deregulation didn't just boost traditional sectors, it catalyzed an unexpected surge in esports and gaming. By reducing barriers for tech startups, Trump's policies created fertile ground for an industry that now generates $184 billion annually. Did you know that Nvidia, which powers both gaming and AI, saw unprecedented growth in that period? Investing in dual-purpose technologies could be your secret weapon in the coming years. Today, AI is no longer optional for industries, it's foundational. Goldman Sachs predicts that AI could contribute $7 trillion to the global economy by 2030, and aligning your portfolio early ensures you're ahead of the curve. Bitcoin, despite its volatility, broke through all-time highs during election night and has positioned itself as a hedge against fiat instability. With increased institutional adoption through ETFs, Trump planning a strategic Bitcoin reserve, and further regulatory clarity, blockchain has massive potential to outperform as the infrastructure for Web3, and the entire future is being built today. Opportunity is everywhere, and the next 4 years are certain to be exciting for financial markets. No matter what stage of investing you're in, we highly encourage you to rewatch this video and use it as a reference through your journey. Don't miss out on the chance to entirely change your finances these next 4 years. If this expanded your perspective, consider subscribing because there's so much more to discover. From health and wellness to fitness and finance, 90 Days Better covers a wide variety of topics aimed at optimizing your personal growth. If you enjoyed this new format, give us your feedback in the comments. We'd love to hear from you. Check the links in the description if you're serious about taking your strategy to the next level, and click on this video to dive even deeper. See you there.